Hello, crypto world. Welcome to the Chart Historian. My name is Justin, and on this channel, I delve deep into crypto charts, exploring chart structures, fractals, and patterns. In this video, I want to talk about XRP, and I want to show you guys how it is possible to nail the peak on the XRP bull run structure. Before I show you that, I want to clear something up. So, not my previous video. The one before that, I was talking about how we were on our way up to the first correction in the bull run structure. And then the video after that was, hey, we're almost at the peak. What is going on there? Well, the truth is, the other day I decided to compare today's bull run structure back to the 2017/2018 bull run structure. That is this one over here. I had been checking on it, and in the beginning I was following it pretty closely, but then it seemed to have deviated, at least so I thought. And so I focused more on the 2021 bull run structure. So when I decided to compare back to it, I was just shocked how close it was following it and how far along we were in it. Seeing what I see now on the chart, I had to come to terms with it myself, that this is how this structure is playing out. But it's not all bad. What you see repeating is the pattern. So one of XRP's previous bull run structures, in this case, it's the 2017/18 bull run structure. But what's not repeating is the timing, the height, and the depth. So what that means for today is that we don't know how long the rest of this fractal will take to play out. We don't know how high today's chart will move up as it follows this pattern. It could go higher, it could go less high than what this fractal suggests. Same with the pullbacks. They could be deeper or not as deep as what this fractal suggests. The timing, height, and depth is going to be original and unique to this new iteration of this structure. But the theme of this video is how you can, now it's a little tricky, potentially nail the peak. And I'm going to show you how to do it. Now this blue line that you see, that's really important. That is the top of the third corrective structure. So at some point, it's going to work its way up and get above that blue line. And at some point after it gets above that blue line, we are going to hit the euphoric phase. It's in that time frame when you can start noticing the pattern that's going to develop, and that will allow you to nail that peak if you want to sell there. So let's dive in and I'll show you what I'm talking about. Okay, so here we are at the very beginning of the XRP chart. This is the first bull run structure. This takes place in 2013, in December 2013. I'm going to go over to CoinTrader Pro and zoom in on this bull run structure. So here we are zoomed in. Now I am on a 5-minute candle. I previously haven't really zoomed in this far. I was curious to see if that pattern was on this one. On an hour candle, you can't see it, but lo and behold, it actually is on this structure. So I'm going to zoom in here. Before I zoom in any further, here are the 3 corrections that take place in the bull run structure. We're going to focus on this right here. So here we are zoomed in. Now this is the top of that third correction. So it comes crashing down in that third correction, and then it starts moving up. It moves up aggressively. It's going vertical. This is important. You can only count things that are going verticals. As soon as it gets above this high, we start counting. So 1, 2, 3, 4, 5, 6, 7. That brings us to the peak. Now, look what this presented to us. So if we counted this and then it moves up a little and counted this, it wouldn't work. When it moves up and moves up again just a little bit, you have to count it all as one correction. And then it had this other little wave right here that didn't get above the high. So all this is one correction. So let's count that again. 1, 2, 3, 4, 5, 6, 7. 7 is the peak. So that was this bull run structure. Let's move along to the next bull run structure in XRP's history. This takes place December 2014. Let's zoom in on it. Now, I'm on an hour candle on this one. This is also CoinTrader Pro. Here are the 3 corrections that take place in the bull run structure. Now, this one presents us something new. Let's zoom in a little. So here is the top of that third correction. Now it comes out of this third correction, but it's not going vertical. It's going flat. It moves up, goes flat. So we don't count anything like this. It has to be going vertical. So counting from when it starts moving up to the peak and it's above this third correction that takes place in the bull run, we start counting. So 1, 2, 3, 4, 5, 6, 7. Look what I did here. I counted all this as 1. This pullback here harkens back to this original one where it moves up, pulls back, then moves up a little more. Let's zoom in on this. So we see that same thing play out here. It pulls back, moves up just a little bit. In fact, I'm going to add another rule here. If it moves up just a little bit more and does another correction, count it all as one correction. So let's go through that again. So it gets above the third correction in the bull run structure. We don't count things that are not going vertical. These big flat areas, that tells us we shouldn't be counting. Once it starts going vertical, we start counting. 1, 2, 3, 4, 5, 6, 7. That's the peak. So that was this one. Let's move to the next bull run structure, which is over here. And we're going to focus on this part right here. Now this takes place in 2017, May 2017. So this first correction is very unique. It has what I believe to be a full miniaturized bull run structure. It comes to a peak, it then declines, and then it likely also has a sideways range-bound time. So all that is within the first structure of the greater bull run structure. So that is a corrective structure. The next corrective structure is here. The third one's here. Let's zoom in on this corrective structure. Here's the top of that corrective structure. Price gets above it, but it's not going vertical like this. It's still kind of going up at this angle. So once we see that vertical action begin, that's when we start counting. So 1, 2, 3, 4, 5. This is like a shooting star here. 6 and 7, which is the peak. So this and this, they're close together, but they're not that close together compared to the other one. This shooting star is a steep pullback and correction. It took place very quick, so it printed as a shooting star on an hour candle chart. But we have the 7 waves, so let's count it again. 1, 2, 3, 4, 5, 6, 7. 7 is the peak. So that was this bull run structure. The next one is over here. And this one, of course, takes place in December 2017/January 2018. It is this structure that today's bull run structure is copying. So here we are zoomed in on an hour candle chart on CoinTrader Pro. Here are the 3 corrective structures that take place within the bull run structure. Let's zoom into this part over here. So price gets above the high of this third corrective structure and it's moving vertical. That's important. So we can start counting. Let's zoom in a little closer. So 1, 2, 3, 4, 5, 6, 7. 7 is the peak. That was here. Let's move to the next bull run, which is the 2021 bull run. This takes place in April 2021. Let's zoom in. So here we are zoomed in on an hour candle chart. And again, I'm on CoinTrader Pro. Here are the 3 corrections. Let's zoom in to this third one. Okay, so price gets above this high. It's going vertical. So let's count. 1, 2, 3, 4, 5, 6, 7. We didn't count this because this is in the shadow of this correction over here. So once again, 1, 2, 3, 4, 5, 6, 7. 7 is the peak. So I'm back at the very beginning of the chart, and I want to talk about peak structure. So you can be familiar with the peak. Maybe you're going to miss that 7 count thing. That's a tricky thing to get. But just because you miss it, there's still chance that you can sell if that's your plan on selling at the peak. So let's get familiar with how the overall peak structure looks. We'll start with this one, the beginning one, the December 2013 structure. So So here we are on CoinTrader Pro once again on a 5-minute candle, and as you can see, it has 2 peaks, and then it has 2 smaller peaks, and then it goes into the decline. A is the first structure of that decline. On this one, we can see that there is one main peak, and then there's these 2 smaller peaks. So we're beginning to see a pattern with these 2 smaller peaks. This one only had 1 large peak, but it does have these 2 smaller peaks. Now, what is this? Well, technically, this is actually part of the decline. You notice that I start the decline with B instead of A. When this is prominent enough, I will label it prominent, as in I can see it from a day candle. In this one, it's not. So technically, it's part of the decline, although it's so hard to see, I just include it in the peak a lot of times. So there you go. This is, if you miss that one peak, you can rest assured that you will see 2 other peaks. And I'll show you as we go along that these 2 other peaks exist throughout all of this. So that was this bull run structure. Let's go to the next one, which is over here. So here is the peak. We have one main peak, and this peak is actually split in 2. So it's like a split peak, hearkening back to this double peak from the first original bull run structure. We have one large peak, and then we have the 2 smaller peaks. And then it goes into a decline. Notice again, it starts with B, the decline. This is technically A, but it's so small you can't really see it. So this one really starts falling. It's technically part of the decline. You can include it if you want to, but this is what you should count on. These 2 peaks after this main peak. That was this one. Let's move to this one. Okay, so this one's a little tricky. We have one main peak that is split in 2 peaks. It harkens back to the previous bull run structure with its split peak. And then let's zoom in a little. This one gets a little tricky, but it moves up again here. It's hard to see on an hour candle. Drops, moves up again, drops. So we have these 2 other peaks. These ones happened very quick. So if you miss this one and you see something like this, count it as a peak. Notice how we have an A here, and look how prominent that is. So this is, when it's prominent like this is when I label it A. Again, you can always cash out here if you so desire. So that was this bull run structure. Let's go to the next one, which is over here in 2021. Have one main peak, and then we have the 2 smaller peaks, and it begins to decline pretty much right away. So this is why you don't really want to count on what comes after these 2 peaks, because it can change. Now, if you so choose to hold on and not sell on this peak, you need to be prepared for some substantial declines. So let's go back to the beginning of the chart, and with this first bull run structure, within, well, let's start here. Within like 13 days, it crashed roughly 79%. Now, I may be off on some of that. Over here, so let's not do 80 days. Let's do something. Okay, so 34 days roughly. It roughly crashes 49%. You get my drift that after that peak, you should not expect price to just hang out there or move up, because it doesn't do that. It moves down. So here, look at this. This was a wick, but it wicked all the way down to 66% decline within the first 11 days. It's not kind. These declines are harsh, and it will take years for you to get back to a bull run high. Maybe not years, but it'll take a while. It has to go through the whole structure again, the decline, the sideways range-bound time, all of that. So this one is 13 days, and it declines. Of course, it's a wick to 73.53%. I may be off on some of that. It's a large decline, and it comes pretty quick. So within the first 30 days, you should expect substantial declines. So here's another one. So this one is, let's not do 70 days. Let's just do this right here. So it's hard to see, but roughly in the first 10 days, it drops around 53%. Now, some of that might be a wick, but it's a large decline. So if you choose to hold after this structure, understand that you will be met with substantial declines, and it's not going to go to those highs until it cycles through that whole decline, that whole sideways range-bound time, and then goes into the next bull run structure. That's just the way XRP is. Now, sometimes that whole cycle can play out quick. Other times it can take years. So here we are back at today's chart. I also included the 3 corrective structures that take place within the bull run. I hope you saw through this video that the bull run structure is repetitive. It is only because it is repetitive that you can even think about doing something as crazy as trying to nail the peak. Now, I'm not saying it's going to be easy, but it is possible. The astute observer of the chart will be able to spot that. Just as the bull run is a repetitive structure, so is the decline that follows the bull run, and so is the sideways range-bound time that takes place after the decline and before the next bull run structure. And here's something to think about. Despite all the narratives, the lawsuit, the victory, all that, the repetitive structures that take place on the XRP chart continue to play out. Narrative has not changed the XRP repetitive macro structure. Today is not different. This is not the end of history. To expect something novel does not have a foundation in history. So just keep that in mind as we progress through this bull run structure. This is not financial advice. I'm not a financial advisor. But if you did enjoy this video, it'd be much appreciated if you hit that thumbs up button. And if you're not yet a subscriber, I recommend hitting that subscribe button. I'll continue to follow up on this chart as it continues to develop. I'm so glad you caught this video. I hope you catch my next one. Have a great day, and bye for now.